Hi, everybody. This is Seth Martin with Middle Class Investor, your host. It is Sunday, and you'll probably notice right off the bat my voice sounds kind of froggy, and that is because I went to my high school reunion and spent 2 solid evenings talking to tons of people. So bear with me. I'll try to make it short this week just because it might give out completely, and I don't want that to happen. So, anyway, we're looking at a weekly chart of the 10-year Treasury market, and you can see we had a down week right here, but this downward trend line continues to hold, and now we see this kind of double bottom. Well, we saw it last week too, and the week before that, but my point is, it's a pretty solid looking double bottom. I was going to zoom in there, but I don't want to zoom in like that. Let's see, use this tool and zoom in. You can see here that it's just a pretty good little double bottom action here. Ran up, retested this support area, and it could, it's possible to get, some candles, down like this, and then turn around. But I don't know, this right here is bearish kind of looking. So I'd say at this point there's a fairly good probability that we could make a slightly lower low. Now it may end up being something like where you get a candle and then you get almost like a little doji with a tail on it, and the tail makes a lower low, but then reverses. And then if you get a reversal candle that looks like so, then we're probably into the next phase of this resuming to the upside. So just, I've been harping on the bond market for a long time. I really don't want to see anybody holding any, would not recommend, not that I can recommend anything anyway, but I would not want to see you holding any kind of bond fund or high yield fund or anything like that at this point. Once these interest rates take off, those are going to go down at a high rate of speed. So just be careful there. The S&P 500, obviously we had an up week. The thing I want to point out on the S&P 500, let's go to a daily chart. I've got a little box drawn here. Of course, it looks like, I was kind of anticipating that we would have closed this gap sooner because it ends right here. But this is at 2035, and I think it's a high probability you'll see this market probably start to give it up once it crosses this zone here, and maybe it gets a tail. I mean, maybe we have a big glass blow off top, and then we come back with a selling candle like this, and then on our way to new lows. Now, where's the support area? Well, there's a pivot here. It's a pretty important pivot, and this one right here looks similar. It looks of a similar importance. It looks like a very small degree kind of pivot. So I would say that the pullback's likely to be somewhere in between here and here. And so let's just draw that real quick and get kind of visual information on that. So you could see a pullback into this area and bounce, and the trend would still be up. So just watch that S&P closely. But I think this gap's going to close. We're just too close to it for it not to close. And the gaps tend to just draw the market right to it. So we always want to be aware of where the gaps are. Let's look at Germany a little bit. Germany, not looking great. Let's look at a 5-year chart. And now, some of you might be thinking, well, why didn't it make it down to this box? Well, hold on. This decision point box, this blue box here. And I don't know, just looking at it, I may have drawn it a little too deep off of this low. But again, it's somewhat arbitrary where you put these, so don't get too hung up on, oh, does it need to be short and fat or long and skinny? That doesn't really matter. What you want to do is if you're this is on a weekly chart, let's say you're on a 60-minute chart, which, I don't know if you guys be trading any of this stuff on a 60-minute chart, but you can see that decision point area is not even on the screen. So you just have to be careful and know where your support and your resistance are, regardless of what time frame you're in, so that you can anticipate the turns in the market. All right, let's go back to a daily. Excuse me. The Dow confirmation, the Dow non-confirmation is still going on in the transports. And you can see here again, there's this really good downtrending line. That's not going to do it, though. Let's do this. So you can see here, we had a really good, pretty much solid down a descending line here. We got a little bit above the line here, pull back, failed right on the line, pull back, and now we're bouncing on the top of this line. So we might, it's possible that you get, a candle like that, and then, one like that with, a tail on it or something like that. So just keep these levels in mind. This level would be around, what is that, 8,350. But on the S&P 500, I'm just focused on this gap right here at 2035. It could go through the gap a little bit and then roll over. And this market could come, when I talk about rollover, I'm really just saying turn, because the reality is any of these zones right here, let me not do that because that's messing me up. Let's see. So, you could have a pullback into this area here, or technically you could have one pullback into this area here. And so the distance between a pullback in this area and a pullback in this area is pretty significant. So just be careful with your 401k, your money. You don't want to give it all back in, one afternoon or something like that. So just be careful with it. Let's see if I can get my screen back. I guess that is back. Is it? No, that is not back. So what's going on here? Let's do a little. Oh, what do I need to do? Is it Alt F8? Nope, that's not going to do it. Where's my Alt Tab button? Huh. Oh, there we go. So let me. Well, I apologize for this, everybody. We're having a little technical difficulty. There we go. That should do it. Okay, there. So let me go back to where I was. Anyway, that's really all I want to say about the S&P 500. I don't really want to go into the other markets. We could look at volatility real quick. The thing I want to say about volatility is we're just at the top. We kind of broke through this upper line, and now we're just at the top of this middle line. And notice all the resistance, all the trading activity in this area. This is probably going to provide some level of support, and the VIX bounce and goes much, much, much higher. So right now the VIX is fairly low, so I think the risk is probably to the downside this week. So just be careful and don't do anything too silly. That's really about it this week, everybody. My voice is kind of crabby and doesn't sound good, and so I think just rather cut it a little bit short today and come back next week with fresh voice, fresh ideas, and then see where that leads us. So for this week, y'all, the Middle Class Investor, this is about it. Please tune in. Please send the link to your friends and family members. Ask them to join or subscribe or whatever the terminology is. And you just got to know that as soon as all this choppiness up in this area goes away, we're gonna have a pretty darn healthy sell-off. So stay with me. Don't leave. Don't put your head in the sand. Don't put pillows over your ears. Stay with me, and let me help you navigate this. So make sure you don't lose a ton of money in your 401k. All right, thanks everybody. We'll see you next week. Bye-bye.